Frasers Hospitality Trust privatization was rejected by the unit holders in the scheme of arrangement meeting. Well, I'm surprised because I really expected the bid to go through. So it was a very surprising move. So this is the transaction overview, and the bid consideration was at 70 cents plus any permitted distributions allowed. So it's going to be above 70 cents if it went through, and well, obviously it did not. Plus the rationale given by the manager in terms of why the privatization was in the unit holders' interest. And of course, the first of all was the obstacles in growing DPS and the NAV, and it's quite obvious. We'll talk about it subsequently. But this hospitality trust, business trust, has not been really doing very well over the years since IPO. It has kind of struggled to do accretive acquisitions and grow its AUM and size. Of course, there was an impact from COVID, right? And the uncertainties from the travel and the tourism outlook. And the small size has really limited its ability to grow its AUM. So if you look at the history since IPO, this was the purple bars show the NAV. You can see that it has been kind of been on a downtrend, right? And IPO was 83 cents, and then after that 82 cents, 77, 73, 65, 65. It was due to COVID, and the grayish line shows you the DPS. It was kind of established around here, but on a downtrend. Of course, this was the devastation by COVID, right? That everybody understood. Since you have hotels and service residences, and the tourism really got hit big time. And the size of this business trust is also quite small. It's ranked number 32 among REITs and business trusts. So it's over here. If you look at the free float for FHT versus the EPRA, any REIT free float entry requirement. So this index required a free float of $554 million for entry, and right now they're at 411, so there's a gap of 142 million. So for them to enter this index and get the institutional buy-in, they need to grow by 142 million of free float, right? So the actual AUM growth will be larger than this because this is the free float requirement. So for them to really enter the index, they'll need to do more acquisitions to grow their AUM. But this is finding it very difficult to do, right? Because of their small size and the discount to NAV. And this is the share price performance, right, over the since IPO. So you can see it's been really struggling, right? After IPO, 90 cents. Then after that, 75 cents. Kind of established around the 70 cents, 75 cents area. And this is the devastation by COVID. And it's been hovering around 50 cents or so, really depressed levels, right? Which is understandable given the uncertainty around COVID. And right when the news of privatization happened, the share price just popped up, right? As people buy the shares and hope to make a fortune in the privatization. So they buy over here and hope that they'll be bought over at 70 cents and gain over here. And ultimately, you see what happened the day after the SOA, right? Share prices collapsed overnight to 54 cents right now. So it's quite a bit, I think, sell down. Maybe due to stop losses from these guys who bought, hoping to make some money off privatization offer. So that shows you, right, the risks of such a strategy. You buy over here and hope that you get privatized, and you profit from here. But then if it fails, then everything collapses and you have to stop loss fast. It's very risky, and I don't play such things. I'm just a simple buy and hold and collect dividends kind of investor. So this is the price action. But you can see that the share price hasn't really been doing well since IPO, and that really makes it more difficult for them to get a premium over book and do accretive acquisitions and ultimately enter the EPRA index. So I think the manager is actually quite right that the trading conditions for this guy is quite difficult, and it's quite difficult for these guys to grow meaningfully if investors do not subscribe a premium to the book. So this is the result of the SOA and EGM. But first of all, this is the threshold required, right? So it's quite simple. At the EGM, you need 75% to vote in favor, and then the SOA, you need 75% to vote in favor. And ultimately, this was the result. The EGM was not a surprise, so everybody voted, a huge majority voted for the EGM, so 96%. So this was a given. And actually, I would thought that the SOA go through, but it was defeated. So the votes for was just a 74.88%, right? So this is below 75%. So the SOA was rejected by a very slim margin. 0.12% is incredibly thin. So you see, 57 million voted against during the SOA, right? Versus 55 million voted against the EGM. So the same, I guess, the same group of people voted against in these two separate meetings. But what mattered was that the number of for votes reduced dramatically. Actually, I was surprised that during the SOA, only 227 million by value voted. You can see that they are over here during the EGM, like 1.4 billion by value voted, right? During the EGM. So I took a look at the annual report. The total number of units was 1.9 billion. And during the annual report, it says that 37% of the securities are in the hands of the public. So 37% of 1.9 billion gives you 712 million, right? So there'll be some people who vote up and don't vote, right? But you think that the votes at the SOA will be kind of like a 4, 5, 600 million, right? Well, just a good portion of people actually is quite hands off and don't really care. But you still expect 3, 4, 500 million or 600 million votes, right? But actually only 227 million voted during the SOA, and because of that, the denominator was small, right? The total, and the numerator was 55 million, right? So actually, the percentage wise went up to 25.12%, and that was enough to cast the SOA defeat by a whisker. So actually, as a outsider, because I don't have any interest in the trust, I'm not too sad about it, because it gave me an option, right? So I still have an option to invest in this REIT, this hospitality trust, if I want to. So right now on the SGX, in terms of hospitality trusts, you have FHT, you have Escort, you have FEHT, and you have CDLHT. So I think quite interesting, because the unit holders who voted against the deal obviously found value in the business trust, right? Even at 70 cents. So they must be betting on the recovery of the tourism sector, right? So the question is, if we should bet and invest in this theme of growing recovery of the tourism sector, and if you think you want to bet on it, then when do you want to put money in? And which counter do you want to put the money in, right? So FHT is kind of like a hotels and service residences. Escort is more diversified. They have now hotels from the merger with AHT, service residences, they have long-term stay in Japan, and you have student accommodations. FEHT is kind of like a FHT, right? So service residences and hotels. And CDL is also kind of like this guy, right? But I think they're making a play into the PBSA sector as well. So there are like 4 options to play with, to invest in if one seeks to participate in the growing recovery of the tourism theme. So interesting days ahead.